crypto policies blind spot tax.
Hi. Thanks for having me. My presentation is not relevant. Let's just talk. Keep talking. You have a presentation? Yeah, it doesn't matter. So I've prepared a couple of slides, but they are not here. It doesn't matter. Thanks for having me. It's amazing to speak at the Vienna Blockchain, conference here. Amazing to see how the crypto ecosystem in Europe is evolving, and especially how Vienna has created such a force of attraction for global players. Understand that you are talking about regulation today a lot, and I was invited to speak a bit about how tax plays into the regulation in Europe. My name is Christoph Finsterer. I'm a tax lawyer in Austria. Usually, we are used to, as a tax lawyers, on a technical level to apply the rules. But today, I'm going to talk about how the rules could look like, what builders, investors, and also CASPs should think about and consider going forward. And I'm going to do so by trying to outline 3 key trends that I see in practice regarding the taxation of crypto in the EU, and then try to infer from that, take a look into the crystal ball, so to speak, to see what are the next trends going to be, what should investors, builders look out for. So, sorry, not used to this. The first trend that we see in taxation, and you read this everywhere, is a coming era of tax transparency that is coming to crypto taxation. With DAC8 and CARF getting effective within the year of 2026, and also even more countries joining the system. Over 50 countries will receive very detailed transaction level data and information on crypto holdings of their citizens. And the message is clear: the area of the impossibility to enforce tax on crypto is over. Investors need to make a clear cut and become fully tax compliant. Also consider whether they need to declare some income in the past. On the other hand, what we also see is level of attention at the tax authorities. Tax enforcement in crypto, as far as I can see from my practice, is increasing. Crypto investments are in the focus of the tax authorities. The number of cases that are being prosecuted increase. The amounts are higher, and hence also the more attention. The big question for me and for us coming from the tax practice is how will the tax authorities be able to use the data that they receive? DAC8 CARF data is far from being data where you can derive a tax base from for most countries. And if we infer from what we saw in the space of traditional banking, when CRS was introduced, the tax officers just lacked the knowledge about the data that they received, and it was in the beginning frustrating for both investors, taxpayers, and the tax authorities. So I think what is needed here is a bit of upskilling on the side of the tax administration and tax officers in the future. The second trend that I see, and that is not as clearly visible as DAC8, is the fragmentation of tax rules across the European countries. Unlike for VAT purposes, where we have a harmonized system, every country applies its own rules when it comes to income taxation, there is no common framework that you can that you as a builder looking at the European markets and European customers can look at. There is some common ground where business assets are usually taxed without any holding periods, and many countries apply holding period schemes, but that's about where it ends. And the traditional tax systems that are not specifically frameworks for crypto taxation usually work for simple spot trades, but as we all know, crypto is not just simple spot trades. When we come to staking, lending, derivatives, or tokenized assets, most traditional tax systems tend to block. The third trend that we see is the tax policy landscape that we are in currently. Governments are actively looking for additional revenue, and more are looking also to crypto to increase tax bases across all European countries. And this we see this discussions all around Europe, or in those countries where holding periods regimes are still applied, that there is a discussion about extending holding periods. For example, the Czech Republic. We see it in Germany, where it is in discussion to abolish in general the holding period. And we have some other countries, such in Austria, that have thought about or already implemented real crypto taxation frameworks that tend to be more tailored to what we see in crypto. So if we take all these three trends together, it's really a question of how regulators and lawmakers can kind of balance these different interests, fostering a crypto ecosystem within the EU, while also thinking about additional government revenue into a coherent tax policy that is well balanced. And one discussion that we often hear is whether or not to implement a withholding tax system. We have such a system in Austria, for example. Other countries are thinking about it, and I think on a high level it appears to be rather simple for a government to impose withholding tax on CASPs. It's an automatic revenue stream for the government, and seems simple enough. But then when you think it through, it adds a lot of complexity for CASPs, higher administrative costs that will at the end be paid by the customers. And to be honest, they are coming from traditional finance, where you have very clear asset classes, simple transaction patterns, and it's just not made for crypto. Also, withholding tax systems in general stem from a time when we had strong banking secrecies and that tax enforcement was simply not possible, which does not fit in the current landscape of tax transparency from my perspective. So, if we come back to these three trends, what do I think will the future bring? I think investors will more and more look about the tax effect of their investments. What it means is for builders, CASPs alike, you will likely also think about more about your target groups. Think about how what tax impacts products and services might have, and also think about tax already when designing products and new services. Second trend, this is very clear, and we discussed this extensively this morning, is that we will see a push from investors and customers for a solid transactional data reporting that they receive when they use your services and platforms. It's just a matter of how hard is it for the customer to fulfill his tax obligations, and the better the reporting on transactional level is, the easier it is for the customer to fulfill his tax obligations. And so these are the two specific trends that I see. One further remark, one thing that we haven't talked about yet is value-added tax. For me, this is kind of the elephant in the room. I said earlier, in Europe, we do have an harmonized VAT framework that spans all the EU countries. However, unlike for MiCA, where the regulator or the lawmakers have looked out and provided a coherent framework across the EU, this is not the case for VAT. What we are currently doing is trying to fit a square peg in a round hole, applying traditional finance transaction logics in VAT to an ever-evolving ecosystem and expanding services. And at some point, this reaches its limits. I think, and it's time for the VAT regulator in the EU to step up and also come up with a coherent framework that also focuses on the neutrality of services and products within the crypto space. Otherwise, I believe we risk having a system in the EU that is for EU and regulated CASPs, raises uncertainty, potentially tax burdens that CASPs and builders will have to cover, whereas unregulated offshore services might profit from that because tax enforcement is simply not possible on their end. Looking at the time, thanks. And that's where I'd like to close anyway. So I think, yes, regulation has a kind of a blind spot when it comes to tax. But I think if industry and the regulators come together, we can still shape an environment that works for all stakeholders alike. And yes, that's my 2 cents on tax and crypto. Thank you.
Thank you very much. Round of applause, please, to Christoph Finsterer. So before we jump to the next panel, of course, we would like to have an amazing melody. And this time it will be Melody by Schubert. There we go. Before, just 1 minute. And we're going to have an exciting panel next. This will be the panel for Bitcoin as a strategic asset for states and institutions. The moderator is Isabella Marquez, Chief Marketing Officer for Saleria. And to get into the mood, please.